Our next guest is bearish on nat gas going into the new year, but her team is bullish on commodities overall. Joining us to break down her outlook is Goldman Sachs head of global nat gas research, Samantha Dart. Samantha, thanks for the time. Great to see you. Talk to me about the outlook for nat gas. How much sort of involves going into yet another winter in Europe where you would expect some to be worried about the supply?
Yeah, so the European balance is interesting because we have record high levels of storage at the moment, but the problem is not where you enter winter, it's where you come out. So what we're worried about is how quickly you will use up those stocks. If we don't see any shocks in the system, meaning if we don't see colder than average weather, if we don't see pipeline or LNG supply shocks, we think that the market balances pretty well in line with where forwards are at the moment. So we don't anticipate any issues. But what we have highlighted is the upside risk during the winter, because if the balance does tighten because of any of these shocks that I mentioned, the next type of price level that would allow the market to balance would be gas to oil switching, and that could pose up to 100% of upside.
Is the United States still a reliable exporter, a friendly neighbor, at least on the nat gas front, or liquefied natural gas?
Yes, it is. But the caveat there is you can only export the size of your export capacity, right? LNG requires very specific technology. You can't just use any port. You need a liquefaction plant. And the liquefaction capacity in the U.S. is at full utilization at the moment. So for the U.S. to grow exports from here, we really need to see added export capacity. And it is on the way. It is coming, don't get me wrong, but it's only coming from late summer next year.
Finally, to the degree to which you can weigh in on U.S. crude, a remarkable turn of events here since the October highs. Obviously, we're starting to look ahead to the OPEC meeting, watching non-OPEC supply. Do we think the mid-70s hold?
No, we think we move higher from here. It is true that we've had some supply surprises in the system. This has weighed somewhat on time spreads on the curve. So there is a reason why we're seeing this pressure on crude that you're mentioning. But it's important to remember that the way we expect things to evolve from here is towards a tighter balance. One interesting anecdote is that oil demand growth this year is about 2.5 million barrels a day. It's much higher than even our optimistic expectations. It's certainly higher than what the IEA expected. So as you continue to see somewhat higher oil demand going forward, we expect oil deficits to grow into 2024. And this alongside this continued cut from OPEC that we expect to last for at least another 6 months should keep the market in backwardation, providing not only carry returns, but spot price appreciation as well. We expect prices to average about $92 next year.
Yeah, those cuts keep getting extended. December, and now we're talking another half of a year. It'll be an interesting couple of weeks here as we work our way to the meeting. Samantha, thank you.